Our first witness is Jess Sharp, Executive Director of the U.S. Chamber of Commerce, Center for Capital Market Competitiveness. This organization was founded in 2007 with a mission of supporting capital markets that are the most fair, efficient, and innovative in the world. Prior to becoming Executive Director at the Center, Mr. Sharp served as Deputy Assistant to the President for Domestic Policy and Special Assistant to the President on the White House Domestic Policy Council. Welcome, Mr. Sharp. You have 5 minutes to present your testimony.
Thank you very much, Mr. Chairman, Ranking Member Altmaier, and distinguished members of the subcommittee. My name is Jess Sharp. I'm the Executive Director of what we call CCMC, the Capital Markets Shop at the U.S. Chamber of Commerce. I appreciate the opportunity to testify today on behalf of the hundreds of thousands of Main Street businesses that the Chamber represents. The Chamber firmly supports sound consumer protection regulation that weeds out fraudulent and predatory actors and ensures consumers receive clear and concise disclosures about financial products. But we want to ensure that the Bureau takes a targeted approach to regulation and enforcement without making sweeping policies that would impose duplicative regulatory burdens on small businesses, and perhaps even more importantly, that would prevent small businesses from obtaining the credit they need to expand and create the jobs we need so desperately in this country. So I'm going to lay out sort of our concerns in sort of two general baskets. First, we have concerns that small businesses may be subject to the CFPB's regulation and other oversight because they engage in one of the 10 broadly described activities laid out in the law. So they could be directly supervised or regulated by the Bureau. Virtually all these businesses are already subject to oversight by the FTC. I think it's important to point out that these are not businesses that have been heretofore unregulated. The Chamber fears that overlap and duplication will be inevitable as the Federal agencies sort out lines of jurisdiction and responsibility. Second, and as has been raised here already today, CFPB regulation may decrease the availability or increase the cost of forms of consumer credit that small businesses use. We've talked about credit cards, I think home equity loans as well, auto title loans. There's a slew of sort of non-traditional commercial bank lending instruments that small businesses do rely on. And this is, of course, particularly troubling given the already challenging lending environment. According to a June 30th story in the Wall Street Journal, quote, in the past 6 months, only 17% of loan-seeking businesses with less than $5 million in revenue landed bank financing. It's a tough environment out there, and we're concerned about any tools being taken off the table. Last week, the House approved an important piece of legislation that would make changes to the Bureau's structure and operations to increase its accountability to Congress and to ensure that the Bureau's decisions are based on diverse inputs. H.R. 1315 would replace the Bureau's current single director position with a bipartisan, multi-member leadership team, giving the agency more stability and balance over the long term. And we give small community credit unions and banks a voice in the process that allows the Financial Stability Oversight Council, or FSOC, to override Bureau regulations that harm safety and soundness. The risks of agency tunnel vision, overreach, and politicization are real for any government regulator, including the Bureau. If these risks are not properly addressed at a structural level, agencies inevitably will, over time, abandon sound regulatory principles. I want to speak next about SBREFA. That's also been mentioned here this morning, and it's a very important point. As it has already been mentioned, the Bureau is included on the list now of agencies that must follow SBREFA, in addition to the EPA and OSHA. And it's a very important requirement. It's a very important requirement for the Bureau to follow in order to get small business input up front. However, the panel process is not a perfect mechanism, and it's not necessarily enough to ensure an independent check on the Bureau's activity that affects small businesses. And so this committee's role is incredibly important in overseeing the Bureau's work and its implementation of SBREFA. Just to mention a few of the concerns we have about how this process could play out. First, the Bureau itself is responsible for the threshold determination that a proposed regulation is expected to significantly impact a substantial number of small entities. And the terms significant and substantial are basically subject to the CFPB's discretion to define. Pardon me. Second, the Bureau does not have to adopt the panel's recommendations, which are advisory, and need only supply a reasoned explanation for adopting or rejecting them. Third, SBREFA covers only the rulemaking process, and I think you heard The first witness described, Mr. Sokolov described, that regulation isn't always the best way to go about doing things. They can use compliance assistance, they can use supervision, they can use enforcement actions to essentially dictate broader policies. And of course, none of those are subject to SBREFA or to any sort of formal process whereby small business input is taken. And just to, again, put a fine point on it, I mean, actions do speak louder than words, and as has been mentioned here this afternoon, the Bureau already does have rulemakings essentially in progress, if not technically. One to merge these two mortgage forms, another to define the types of businesses that the Bureau will supervise in the non-bank space. And in neither case has this SBREFA panel been put together. Now, technically, I guess it's not required at any particular stage, but if we want to get this right from the beginning, we would encourage the Bureau to begin that process as soon as possible. So with that, I thank you all for having me here, and I'm happy to answer questions.